Glad to know you're still with us. Nigeria's Debt Management Office, DMO, has made scheduled coupon payments on 2 savings bonds for the second time in 2 months, citing system and processing issues. Payments were due on September 12th for bonds sold in June, raising 4.2 billion naira. DMO's Director General, Patience Uniha, assured that the issues were being addressed. This follows a week-long delay in August, raising concerns over the government's ability to manage its rising debt burden, with debt service payments nearly double the revenue. In first quarter 2024, introduced in 2017, Nigeria's savings bonds aim to diversify borrowing sources and provide retail investors with returns. Aladipo Ajayi, Head Fixed Income and Forex, Chapel Hill Denham Securities, joins me for more on this. Good morning and thank you for joining me today.
Good morning. Thank you very much for having me on this morning.
Absolutely. Well, you're the head of fixed income at Chapel Hill Denham, so I assume you have, information on the true position of things. Was there a delay in the payment of coupons? For how long and how often, beg your pardon, has this happened?
Yeah, truthfully, there was actually a delay in the coupon payments, and these coupons should have been paid since September 12th, and it was delayed by a week, and there was an escalation to that effect, and since then we've seen the DMO actually rise up to the occasion to actually clear the situations, and I think sincerely speaking, it's not a good one in such a time like this, because it's not something that's supposed to be happening when you are seeing what has happened in emerging markets in the last years. So this will actually dampen investors' confidence, and we saw that on Friday as there was a sell-off of some Nigerian paper. So I think DMO now understand the impact of what happened, and I'm sure it's not something that will actually repeat itself again.
Okay, so can you confirm to us if this payment has been made and when it was made?
Of course, immediately the DMOs are raising up to the occasion, and of course they're already clearing the obligation. And sincerely speaking, it's not something that is as a result of incapacity, lack of capacity of the government to be able to meet the obligations. And I think I would agree with DMO is more like a system error, or someone actually dropped the ball along the line. Because the total payment that we are talking in question is just about 200 million. So you can't tell me that Nigeria as a country does not have 200 million to meet some of these obligations.
Well, this is the second time it's happening. So do we continue to blame system and process issues for this same thing? That something needs to be done about it. So
let me clarify this thing. And I think it's more of a human error. I think that the schedule was not appropriately updated. Because what happened is that on that particular day, there are many funds that were paid at that particular period. You understand me? Because there's a lot of funds that actually coupon payment that is due, because it's more like a quarterly coupon payment instrument. And like you actually mentioned at your introduction, it started since 2017. So it simply means that every quarter, or maybe every month, you tend to see the DMO actually paying coupon because these instruments are issued every month of the year. So over time, you'll have seen an overlap, and many instruments require payments in a particular month. So I guess the error is from someone that should have actually updated the record that is sent to the unit that is handling the payment. Because what's actually happened is not something of the fact that the country could not be able to actually meet that obligation. It's the fact that there was an error, and I think they need to actually handle this thing with care. And for me, another thing I also think is that I think it's more like the DMO is not giving a kind of priority to savings bond, because this has never happened when you talk about the real bond. Maybe because of the size, and maybe because of the universe of the investors that actually play in that segment. And this has not happened, but we've seen this happen back to back on savings bonds. So it's something that the DMO needs to rise up quickly around to actually quash this kind of sentiment, so that it would not actually distract people that actually want to invest in that segment of the market.
All right, please hold on. We'll take a break now. When we come back, we'll take it up from there. Thank you. Thank you for staying with us. Well, Oladipo Ajayi is still with me, and we're talking about DMO's delayed payment of coupon. Thanks again for staying with me, Mr. Ajayi.
Yeah.
All right, so I just want to get your thoughts on this clearly. I know you talked about something earlier, but don't you think this is a sign that the government is coming under pressure from its rising debt burden?
No, I don't think so. I don't think so. Because the money in question is just about 200 million naira. So it's not enough to actually put the country in order under anybody. I think it's more, I would actually rather believe the statement of DMO than actually looking at it from that perspective, because 200 million is not so big to put Nigeria under pressure. And by the way, this is more like a local instrument. It's not a foreign denominated instrument. So if it's like an Eurobond now, we could say, oh, maybe Nigeria is under pressure because of the lack of dollar liquidity. We can't say Nigeria does not have naira liquidity to actually meet its obligations. So I would rather toe the line of DMO than actually believing that Nigeria does not have 200 million naira to pay the coupon due.
But I'd like to reiterate something you said earlier, talking about maybe the DMO is taking this for granted because it's dealing with local investors and it's just a savings bond, maybe because we're dealing with retail investors right here. But that, I don't think we should let this happen again, because if it happens again, well, you may not be able to defend the DMO the way you just did. Anyway, so according to monthly fiscal accounts, which was published on the government's Open Treasury website, debt service payments of 2.3 trillion naira in the first 3 months to March were almost twice the revenue of 1.4 trillion naira in the same period. Now, if this data is anything to go by, what does it mean for the country's fiscal sustainability? I understand your clarification saying it's just 200 million naira we're talking about here. Nigeria cannot be so broke that it cannot pay 200 million naira, right? But taking a look at this, what do you make of this?
Well, you know, one thing about debt services, we need to also understand what happened within that period of time. The early part of the year, there was a maturity of the 2024 bond, and that was actually huge. And that was I think that's close to about 800 billion. And when you also had other coupon payments and other matured obligations, so it comes to about that figure. And, you know, revenue in the early part of the year cannot be compared to, because that's just the beginning of the year. And aside maybe oil revenue, you can start talking about other income like tax and all those things at that particular point in time. So, and I think that's one of the reasons why we saw that disparity. But over time, we have been able to actually understood the fact that our debt servicing to cost of servicing debt has actually dropped aggressively compared to where we used to be. Before now, cost of servicing debt to revenue was around 99% at the time. But now we are around 67 or 60% as we speak currently. And the focus of the government is to actually further drop it to around 45, 46%. So I think the early part of the year had its peculiarity. So if we want to look at the data, it's better to actually look at the whole, maybe a half-year data than actually just looking at the early part of the year. But if you want to go by the data at the early part of the year, it simply means that Nigeria is under pressure because of the fact that the cost of servicing debt is almost twice the revenue generated within that period of time. And it also means that Nigeria should actually cut down on its debt. And Nigeria should find a way to restructure its debt, and Nigeria should find a way to actually ensure that they actually increase revenue, their revenue generating capacity. So these are some of the things that need to be done if we look at the data based on the period that you actually mentioned. But I would actually rather advise that we look at more like a half-year figure to be able to see clarity because of the peculiarity of the Q1 data.
Well, talking about half year, Nigerian bonds witnessed significant sell-offs in the second quarter of this year, so it's not the first quarter here, irrespective of their comparatively, attractive yield. What do you blame that on? Should we be worried about this? You talked about what happened recently, but I'm talking about this one now. What should we make of all
We cannot be. Let me explain what happened at that particular point in time. In February, the Monetary Policy Committee raised interest rate by 400 basis points. In March, MPC raised rate by another 200 basis points. That is between February and March. You have raised rate by 600 basis points. And don't forget that you need to price this into the yield of government instruments. And that's one of the reasons why we have seen a one-year paper that opened the year around 8%, trading at as high as 20% discount rates as we speak currently. And don't also forget that you also need to look at the regime change. The body language of the Monetary Policy Authority has changed aggressively to more of an hawkish policy. And we have seen more that the central bank has been very aggressive in mopping liquidity from the system. So you expect that to actually push rates up. And that's exactly what happened. It wasn't as a result of the fact that, maybe because of the fact that Nigeria, people are actually perturbed about the capacity of the country to actually pay. That's more of like the policy direction than the credibility of the country.
Interesting. Let's close with this one. The NBS has announced plans to rebase the country's gross domestic product rather, and consumer price index in November this year. What's your take on that? Should Nigerians be worried? Because the last methodology that was changed, I mean, that's the unemployment, right? It's not something Nigerians are probably proud of. Should we expect some change?
Well, for unemployment, I don't actually agree with the methodology. But when you look at inflation figure and when you look at GDP, it has timeline that require rebasing. It is a global practice because when you look at the metric for calculating, you look at there's a base year that you are using and you are comparing with current year. And imagine you still comparing inflation, let's say for 10 years ago as the base period. It will not be reasonable because your data or the figure that you are turning out to me, it looks more like outdated, and you need to actually find a way to actually rejig the figure to actually show the current happening in our environment so that the investor can know how to actually capitalize on those data to be able to actually achieve optimality in their own investment decision. So I think it's one of the best decisions that you can take in any climate. It's not peculiar to us. We've seen South Africa done that. Egypt has done that. We've seen that actually obtainable in even more developed environments. So GDP rebasing, CPI rebasing is a normal norm in global environment. So we have some countries that they do that every 5 years. You have countries that do that every 10 years. But I think that we also need to actually put timing to our own as well. We need to know how often do we want to do this? Do we want to do it every 5 years? Do we want to do it every 10 years? Do we want to do it every 3 years? So when you make it systematic, it will not bring this kind of uproar that that we already seen around replacing the data, because by then people that factor dating, people are already aware that they expect that to happen at any particular point in time.
Oladipo Ajayi, thank you so much for your thoughts on the show today.
You're welcome. Thank you very much for having me on this morning.